If you turn on the television and podcast channels right now, the next thing you'll hear is the devastating news about the Chinese economy, the stock market blunder, and the current decline in the Chinese real estate business. What's going on, you ask? Well, China is going down, and believe me when I say they aren't going down alone. They're going down with another country, the United States of America. You heard that right. The brewing crash in China will evoke some eruptions in the US. So, get ready for what is ahead. In today's video, we shall examine number 1, economic decline of China. Number 2, what will happen in the US. Number 3, the ripple effect of the decline on the world. Let's begin. The economic decline of China. China is said to be the second largest economy in the world, with a gross domestic product of over $17 trillion as of 2022, falling just $8 trillion behind the United States. These numbers showed a remarkable turnaround for a country centrally controlled, stagnant, and isolated from the global economy. Roughly 4 decades ago, the Chinese government decided to open up its doors to foreign investors and partners who were willing to introduce the country to new market strategies that were capable of setting China on a course to fantastic economic growth. Since then, China has been among the fastest growing economies in the world until recently. Everything has come tumbling down. Look at the Shanghai market, which happens to be one of the most important stock exchanges in the world, and you'll realize that over the past 5 years, the stock has only gone up by 5.2%. The Shanghai Composite Index, which is supposed to show us the general health status quo of the market, has constantly been on a low. In January 2024, it was at its lowest point in 5 years. What is the cause of the decline in the Chinese economy? The major cause is associated with real estate problems. Over the last decades, China has invested wildly in real estate and property development. The Chinese citizens jumped into the market, investing vast amounts of money in real estate with the hope that over a certain period, the value of buildings and properties would skyrocket. In the last 20 years, China's home prices have increased a lot, about 10% annually on average. That means your house could double in value every 7 years. In 2021, average home prices in big cities like Beijing and Shanghai were 20 times what a worker makes in a year. Imagine you'd have to save all your money for 20 years to make a down payment. Unfortunately, by 2023, the housing market had started to crash. According to a source from the Financial Times, home sales in some big cities had dropped by 30% compared to the year before. That's a considerable drop, and now many investors are stuck with properties that aren't worth as much. Now, everything seems to have taken a complete U-turn. People no longer desire to own properties because of the state of the economy. Government regulations on property developers borrowing money have also contributed to the mess. Currently, China's cumulative mortgage debt is over $12 trillion. Evergrande, China's most significant property developer, owes a whopping $300 billion, according to Al Jazeera. Their woes compound as a Hong Kong court has ordered Evergrande's liquidation due to its inability to present a reasonable debt payment structure. You might begin to wonder how this concerns or affects the United States. Give me a few more minutes of your time and we'll get there. You will be shocked at what is about to come. Another major contributor to the economic decline is debt and more debt. According to Reuters, China's total accumulated debt is about 250% of its GDP, based on the figure we stated earlier. That would be around $42.5 trillion. At this point, a crash is inevitable. What if I told you that what has occurred in China is about to be the fate of the United States of America? Would you believe that? Let me know in the comment section below. The United States and China share a significant bond when it comes to economic activities. Don't forget that both countries have the world's largest economies, and there is a need for some dependence to maintain growth. The relationship between these two countries is characterized by cooperation and competition. Beyond that, both countries have significantly impacted the economic landscape. Let me now remind you of the Chimerica concept. If you're hearing this for the first time, Chimerica is a word used to describe how closely connected the Chinese and United States economies are. One critical factor in China is its cheap manufacturing, characterized by cheap labor and ultra-mass production, and how Americans can afford these goods. Given China's current situation, it is clear that the demand for raw materials from America will decrease. Consequently, companies will produce less, leading to a necessity to raise prices domestically to cover costs and repay loans. These circumstances are laying the groundwork for inflation. Speaking of inflation, the United States is already battling with the problems of inflation. There are a lot of uncertainties surrounding the economic state of the country in the next couple of years. Businesses are shutting down, and the standard of living is gradually reducing. Experts have predicted a recession in the coming years. While the American government seeks to align with major world powers, China, their closest ally, is falling significantly and taking them along. Another point is that Chinese investors have poured about $31.7 billion into the U.S. real estate business over the past 5 years. This shows you how much investment the Chinese have made in growing the American economy via just a sector. However, with the current problem of Evergrande, the reduction of access to capital for Chinese investors will be prevalent. This means that the financing of real estate in the United States is becoming a complex problem. How? Simple. It means no money from foreign investors and rent increases, making it difficult for American citizens to pay. It is also important to note that the United States is currently at a disadvantage in technological advancements. According to a China briefing, up to the first half of 2023, Chinese companies have invested a substantial $53 billion in U.S. facilities. This investment, though less than half of the U.S. investment in China, has created over 119,000 direct jobs. With the economic meltdown in China, Chinese companies in the United States will have to shut down and pack their bags. Apparently, it will be difficult for the United States to complete significant projects that the Chinese have spearheaded. This also means that the inflow of money to sponsor these projects will be cut completely. The United States could be on its way to losing a lot of resources that could help strengthen its economy. As it stands, America could be in a fix. Jobs and houses would be lost. American companies that relied heavily on the Chinese market would close, forcing more Americans out of work. One sector where Chinese investments have notably made a mark is the automotive industry. The Chinese produce at low cost and sell at reasonable prices. Given the situation, it is possible that owning a car in the United States might seem like an arduous task. And finally, we'll talk about the ripple effect on the world. In this state, the issue with China will affect different nations differently. Some might handle it better, but it will definitely slow down their growth. Companies or countries that rely heavily on China for buying and investing might have a more challenging time. These countries might face a decrease in foreign direct investment and lower export demand. If China's economy declines, it could lead to difficulties in trading goods and parts, impacting businesses and individuals across multiple countries. China has a large demand for commodities such as oil and metals, so any decrease in its purchases could affect the countries that rely on selling these goods. As a result, price fluctuations may rise, creating challenges for those nations. Additionally, China receives significant investments from other countries, and a deterioration in its economy may lead to reduced funding from external sources. It means more danger for China. Other consequences include a money market mess, less innovation, and many more. In short, if China's economy declines further, it could cause many problems around the world. Economies are dependent on themselves. It is very likely that when one falls, the other will follow. We must understand these problems and find ways to deal with them to keep things stable and robust. Thank you for watching this video. See you next time.